10 years ago, Hank Paulson, in your industry, came to Congress with their TARP program, Toxic Asset Recovery Program. The plan was for the federal government to buy toxic assets from you. That is to say, to buy the worst mortgages in the back of your vault. If we had spent $700 billion on toxic assets, we would have lost the lion's share of the $700 billion. And the effect on our social structure, if we were having this hearing and the federal government had lost the lion's share of $700 billion, everybody in this room would be a socialist. That's the effect it would have had on our social fabric. Instead, this House stood strong. This House demanded changes. They jettisoned the idea of buying toxic assets and instead bought preferred stock. And the only reason we got our money back, and the only reason that capitalism continues to be the majority view in this country, is because we didn't buy toxic assets, and instead, by buying preferred stock, we got our money back with interest. Real capitalism is that every bank of every size competes fairly. But too big to fail is too big to exist. For 10 years, Senator Bernie Sanders and I invite more co-sponsors this year, have been putting forward our bill to say too big to fail is too big to exist. The giant institutions need to be broken up. Why? I'll give you the capitalist reason why. The IMF study says that you derive a 0.8% cheaper cost of funds because Wall Street knows, big money knows, that if you're going down, you'll be here, and they believe we will bail you out. Whereas a medium or small sized bank, if they go down, their creditors are not getting bailed out to the extent they're over the FDIC limit. Let's talk about consumer protection. I'd like you to raise your hand if you don't impose forced arbitration provisions on your regular middle-class customers. Everyone's let the record show that, with the exception of Mr. Gorman, every hand went up. Mr. Diamond, that means if one of your customers, say, had a phony account opened by an overzealous one of your employees, and they already had one account with you, but all of a sudden a different account got open, they would be free to go to court.
We prefer arbitration, but we give them $500 to take us to small claims court, so they're free to go to court.
Wait a minute. You get a phony account, your credit rating goes down, you miss an opportunity to buy a house. 2 years later, that house is worth $100,000 more, and you get to go to small claims court about that. So you're saying that you will not allow the regular court system to be available to them. Is that correct, Mr. Diamond?
I think that is the regular court system.
The small claims court is a separate court system. You will not allow them to go to federal court. You will not allow them to go into a court of general jurisdiction. Is there anyone, I'll do it again. Is there anyone here that would allow a regular middle-class customer to, if they had a dispute, go to a regular court of general jurisdiction? I see Mr. Moynihan's hand went up, and Ms. Corbat's hand went up. I want to focus on Ms. Maloney's bill. For one, it would prohibit manipulating the order in which you debit an account in order to maximize overdraft protection. How many, please raise your hand if I can count on your lobbyists here in Washington, and you all have them, to support a bill that will prevent manipulating the order in which accounts are debited. Not a single hand. Oh, thank you.
See the whole bill.
What?
Whole bill.
Okay, but this one provision you would support.